Hi, guys. Hello, everyone. Thank you very much for being here with us today. That's the Value and Growth Private Equity Investment Opportunities in Greece panel. And hopefully we're going to have a very interesting discussion around private equity in Greece nowadays. I'm going to start by yielding the floor to Minister Yannis Tsakiris, who is the Deputy Minister of Development and Investments, Public Investments and NSRF of the Hellenic Republic. Who's going to start with some introductory remarks about the topic, and then we're going to go on with the discussion. Minister.
Good morning. Thank you very much for the invitation. I will be very short and I hope precise, because talking about private equity, I think we have to be short and precise. It has been said several times over the last 1.5 years that there's a significant amount of money flowing into Greece. It's the Recovery and the Resilience Fund from the European Commission, is the new programming period that is bringing a significant amount of European structural funds. So all in all, there are more than 70 billion of euros that have to be spent in Greece within the next 5 years. And this 70 billion euros of public money, of European money, that will be used to support SMEs, to invest in, to support infrastructure projects and so on and so forth. Those 70 millions are mainly or exclusively in the form of grants and debt. And obviously what is missing the equity part. And I strongly believe that there is a significant opportunity for private equity in Greece throughout the next 5 years, given the excess of grants and debt. And as debt is becoming more and more expensive, I think private equity is becoming even more interesting. And as by definition, we are talking about private equity, we're talking about smart money. And for this reason, I think that given also the situation of the private equity and venture capital ecosystem in Greece, it becomes obvious that, at least for me as an ex-private equity professional, that the reward is going to be high and with, let's say, in theory, lower market risk. The private equity and venture capital ecosystem, the last 10 years in Greece has increased significantly. As a country, as a government, we have put in place several financial instruments to co-invest with independent private fund managers. And as we speak, they're out, I would say, in the air, almost 1.5 billion euros of public money in several programs from the Hellenic Development Bank for investments to be invested in private equity and venture capital funds that they will be established and invest in Greece and attract private investors as well. We are covering almost all the sectors and stages, starting from seed capital. We have a program for technology transfer, where we are investing in technology transfer funds. We have a program for early stage technology funds. We even have a program where we are co-investing on a pari passu basis for infrastructure and energy efficiency funds. So, to conclude, significant amount of money is flowing to Greece in the form of equity and grants, debt and grants. Equity is missing on one hand. On the other hand, the private equity ecosystem in Greece has shown a significant increase over the last years. Fund managers our number of fund managers, and particularly first-time managers, is increasing. I think if everything goes well on a European and a global level, I think the next 5 years will show dramatically increased amount of money invested into the private equity. Thank you.
Thank you very much, Mr. Minister. I really appreciate your comments. Actually, I'm going to take it up with what the Minister said about the 5 years going forward, and I think that we all here in the same room, we can all definitely agree on the fact that the past couple of years, the past 2 or 3 years, we've seen a number of transactions in the Greek market, definitely more transactions than we used to have in the past. And but when looking at the Greek economy, one needs to realize the nature of the Greek economy. And the Greek economy is largely dominated by SMEs, what we call SMEs. It's really interesting to see that more than 90% of the Greek companies, there are actually numbers that indicate that up to 99% of Greek companies fall within the definition of SMEs. And those account for 83% of Greek employment. That's a very interesting thing, and I mean, obviously, it might sound over-dramatic, but if you compare it with the global figures, whereby indeed more than 90% of the global economy is dominated by SMEs, and 50% of global employment goes to SMEs practically, then you can understand where we are in terms of our economy and where are the real opportunities. As the Minister said, indeed, you see a number of funding options for this kind of companies. Obviously, equity is the big question mark. You've got debt, you've got institutional investment, which is something that throughout the EU and particularly in Greece, we see more and more being promoted. So I guess one of the things we'll be discussing today is how we can have more share of the private equity investors in this kind of investments. And at the same time, you've got a probable global recession coming up. And that's something that also we need to take into consideration. There are definitely views out there saying that we'll be on a global recession as of January. And then the question is, how is Greece going to perform within such a global climate, given that we've had the past experience of how the Greek economy operated in different international financial circumstances. So against this backdrop, I want to kick off the panel discussion with Mr. Omiros Sarikas, who is sitting beside me, and who is very, very, very experienced in private equity investments in Greece. And actually, I would like to ask you, what is your view on the private equity sphere right now in Greece? And eventually, what we've been listening to for some time now, that Greece is a success story in terms of investments. Is that a correct statement, or how would you think about that?
Thank you, Orestis. Thank you, Minister, and good morning to all. So with regards to the question, how is private equity in Greece? What it has been aforementioned is that there is an ample supply of capital. And there is also a number of SMEs. But in the private equity in Greece, we have a very specific type of SME, micro SMEs. In my industry, we call them small caps, all right? So small caps in Greece account for twice as much as every other European state. So they have very specific needs, and small caps include both the traditional SMEs of the economy and the startups, post-seed financing startups that are now scaling up. The needs of those small caps and startups has been exposed to about 4 billion euros. And that number grew 8 times since 2017, within 5 years, right? 8 times growth within 5 years. So we have the demand, and we have a particular need for the economy. And that brings us where's going to be the money. Now, in a healthy economy, we go to banks and private equity. And in the economies of the United States, the banks account for 40% to 50% of the supply of capital. In Greece, that is 90%. So we're overbanked. We have over-resilience in the banking sector. So the role of private equity is quite particular, and it needs private patient capital, because the great entrepreneurs require, like every entrepreneur, a specific skill set. It's not just money, it's also governance, etc. Now, that brings us to what will be the case of Greece as an investment story. And Greece is an investment story, a success story, because it's a story of resilience and growth mindset. We went through the curve. Right now, Greece is going through a V-shaped recovery. We have a global energy crisis, and Greece is coming as a leader. We are one of the least exposed countries, if you look at the map, together with Estonia and Luxembourg. And in fact, we are teaching the European member states how we should actually recover from the energy crisis. So I think Greece has both the mindset and the infrastructure to sustain the recession. And luckily, we have financed, and luck here is preparation meets opportunity, we have financed that debt with a long-term plan. So we're going into this very well prepared, and I think Greece will be a success story going forward as well.
Omir, thank you very much. I'll keep what you said about preparation, actually providing for opportunities. And I'm gonna go to Konstantinos Dermanis. Hello, Konstantinos. Do you share what Omiros just actually told us? What is your view? How attractive is eventually the Greek market in terms of private equity investment?
Thank you, Orestis, and allow me to thank also Capital Link for the invitation. I will start with the country level. So Greece is a very attractive market for investments, and it shares some very positive facts. GDP growth rates expected to be 2% next year, compared to flattish growth for the European Union. So on an absolute level, but also comparing to its peers, Greece is performing very well. In addition, a number of structural reforms have taken place in the past few years, and more are expected to take place in the following ones. There's fiscal support both for individuals and corporates, and there's availability of capital, whether that's coming from the banking system, which has a very aggressive loan growth, but also the European funding, including the NSRF, which is 32 billion or 18% of GDP. In addition to that, investors' perspective about Greece has improved dramatically over the past few years, and because obviously you cannot have investments without equity, and this is clearly seen in the number of transactions and the size of transactions that are taking place. Only to mention a few, Partners Group acquired Pharmathen in the past summer. CVC has a local office and has been very active investing in insurance, food, technology, and other sectors, and healthcare. And also there are many large technology companies that have established local presence, including Microsoft, Cisco, and TeamViewer, to name a few. In addition to that, coming to private equity, Greece is a very underpenetrated market in terms of private equity, which shows the high potential there is for the market to grow further. And Greece is in one of the, has a very low also number of investments per year and size of investments on an annual basis. And in fact, this can be seen in practice, where you have a few funds active in the market, but in reality, most of the transactions are off-market transactions. In our case, in the IRAMA 1, 9 out of the 10 transactions were off-market, compared to cases in the Western world where most of the transactions take place through processes and advisors. And also another example in practice is that in our case, in Minerva, we made an investment in Minerva, and we co-invested with Elikonos and EOS. So not only there is no a need to compete, but we actually work together. In addition to that, to the low competition environment, there's a healthy and large supply of deals. So we have identified that there are approximately 4,000 companies that have high quality management, strong fundamentals, and have export growth potential or import substitution capability. And by sharing my own personal experience, I have evaluated more than 400 companies across several sectors in the past 10 years, and I continue to be amazed that every year I meet with, I found out about a new company that has a strong investment story. So to summarize, a market with low competition, healthy supply of deals, so for investors that have the necessary network and local know-how, Greece is a very exciting market.
Thank you very much, Konstantinos, and I think we all agree so far that indeed Greece seems to be a very interesting market for private equity investment, and I think you're adding another element which is very important, the fact that there is low competition, that there are opportunities for different kind of vehicles to cooperate and actually do transactions together. That's also very important. I'm going to Takis Solomos. Hi, Taki, and I want to ask you something with regard to, like the sector-specific approach, the industry-specific approach. We're all hearing that obviously there are many deals going around, but what are the sectors of opportunity for this kind of investments in Greece? And what is your company in particularly looking at in terms of specific sectors and specific opportunities?
Thank you so much, Orestis. Thanks so much for everybody coming here today. And I would like also to help to thank also Mr. Bornozis and Capital Link for having us here. And it's a great panel, and it's great to be here. We have been fortunate enough the last 4 years to be investing in an economy that's growing, and that is creating opportunity because it's very tough to find growing sectors in an economy that is decreasing. But the last few years there is a comeback of the Greek economy in the growing side of the equation. There have been two sectors that are really fueling I would say the rest of the economy to grow, which is the hospitality and the energy sector that are fueling construction and all the related services sectors that are providing assistance to these sectors are also growing. So we find a lot of interest in these subsectors that are supporting the energy and the hospitality and the construction and the real estate sectors that are a lot. And then, of course, we have the resilient food and beverage sector of Greece that has been there for all the years of the crisis. Greek food businesses and the agricultural sector, despite being very, let's say, boring and, not that, let's say, high-end. On the other hand, though, they provided the jobs and the opportunities for the economy to grow, and we should be very thankful for that sector in the Greek market. And of course, there is the tech sector that is booming in the recent years. Only this year, I do believe that venture capital-backed Greek startups and the Greek technology businesses raised more than 400 million euros until November, which is, a significant amount of money for this subsector in the Greek market. So for us, we are active in all these sectors. We have a very specific focus in the food and beverage sector because we find there that there have been entrepreneurs and businesses that have managed to be extremely resilient during the crisis years. They managed to grow their businesses outside of the country with exports. And of course, they are taking advantage of the hospitality booming, and they have, let's say, a market that is not the 10 million of Greeks, but including the 30 million of tourists that are visiting. This creates a very, very significant market for the F&B sector. I would like to make an example of companies that are growing internationally here. And since we are in the United States, in our portfolio we have a company that is called Mega Gyros, which is a producer of ethnic Mediterranean meat products, and this is a company that is having actually built a plant during the Greek economic crisis in 2012 in Lyndhurst in New Jersey, and has a significant presence also in this country. And this is an example of a business that took advantage of a strong local F&B sector in Greece, because the products that Mega Gyros is producing has a very big market in Greece. They grew in the European Union via exports, and they have a strong presence with a production facility in this country as well. So we regard that there are many, many sectors that they have growing potential, and we are very fortunate about this.
Thank you very much, Taki. That's a very interesting example, and thank you for sharing that with us. I do agree indeed that the energy and hospitality sectors present lots of opportunities in Greece. Obviously, the energy transition is a big thing that everybody's working for right now in the country, but also in the European Union. So definitely there will be lots of opportunities going forward. Eleni, Ms. Eleni Bathianaki, hello.
Hi.
Thank you very much for being with us. A question I have for you is basically the following. Let's assume in a hypothetical that you gotta choose between, like making an investment as a private equity fund in an SME or in a large corporate. What are those elements that make you decide to go for one or another choice, and mostly towards the direction of an SME?
Thank you very much, Orestis. Very happy to be here today. Well, my short answer is that Greece actually provides opportunities across all segments. You can find interesting opportunities in the scale-up, SME, and large corporates. I guess in this panel we are more experts on SMEs, and the very short answer to your question would be that the SMEs have a hidden value on how they can really transform from SMEs to large corporates. It is, I think, a hard exercise, but it's very much needed in this market, and it can be challenging, but at the end of the day, it can really be rewarding for investors. We have examples like that happening over the last 3-4 years in this country, and this should drive our interest in the SME market. As already said, the Greek SMEs market is very peculiar, has specific characteristics. It actually makes up the majority of the businesses in Greece. Most of them are family-owned. Even if the second or third generation have reached the top, it's still companies owned by the owners and run by the owners of these companies. And the reason why they have stayed SMEs for a long period of time, I think it comes out to 3 main reasons. There has not been a very fruitful financing structure so far. So the debt market was not there for many years. The equity market was not there. Secondly, these companies lack the managerial expert support. I mean, as I just said, they're family-owned. Usually a one-man, very rarely one-woman show. So they didn't have all the business and experts surrounding the management teams. And thirdly, there was a lack of access to networks, either industry experts or financing. We're very lucky because the last 3, 4, 5 years, I would say, this has changed. So we have seen SME owners realizing the value of equity, not because nowadays the debt is quite more expensive, but also the equity gives you a leverage impact. It gives you the ability, the equity, sorry, gives you the ability to start looking at the bigger opportunities. So they have seen the value of equity. They have seen the value of having a strategic advisor in your shareholder structure. And also they have realized that their size, small, medium enterprises, even though it has constraints, still it gives you the ability to adapt and being flexible. So in this environment, it's actually a very useful tool. Now, as private equities, we are actually tapping all the areas where they lacked in the past. So in addition to the capital that we do provide, the growth capital that we do provide, we do give them strategic guidance that these companies need. We are there to support them managerially, and of course, given our expertise and the fact that we are in the market for many years, we do give them access to financing, to experts in various industries, so they are able to look at a bigger size and eventually to be able to transform from SMEs to large corporates. I think it is a valid investment opportunity. We have seen at least 2 or 3 cases where within a 2-year investment time horizon, companies have transformed to SMEs, to big corporates. In one of these cases, we have managed actually to divest as well as EOS. But it is amazing because when we invested, it was a company with 35 million of revenues, and in less than 2 years, it tripled its revenues and EBITDA, but also the number of employees. So big economic impact as well. And I think the SMEs that we should be looking and should be the next large corporates are the ones that have a scalable business model. They have a good business proposition and good management teams. When we have these 3 components, I think we can support them and we can raise the next large corporates. Thank you.
Thank you very much, Eleni. I would summarize what you just said as like opportunities lies in transformation, and that's very important because if you guys do what you do, then obviously we're gonna have a broader transformation of the Greek economy. So that has also an impact on the economy itself. Thank you very much. Omri, I'm going to go back to you. And we have been discussing the present. We discussed a little bit the past. Now, let's discuss a little bit about the future. We have a new year in front of us, and 2023. Please let me know what you think about private equity investment in 2023. What is your forecast, and what are your plans actually? What are you going to do on the field?
Thank you, Orestis. With regards to private equity for Greece for 2023, I think the biggest opportunities come from the program that the Minister described. The RRF and ESPA provide an enormous supply of capital that needs to be matched. We heard the numbers. What we also know is that this amount of money needs to be spent in a specific period of time, 2025 for the RRF with a review next year, and ESPA 2027, if I'm not mistaken. That creates a track of growth for the next 4 to 5 years, which we can capitalize on. I think the challenge that we're going to have is as we go into a recessionary era, and Greece will be the odd exception, we're going to have to manage internationally our suppliers, and we're going to have risk management. Eleni mentioned quite a lot about the founders and their lack of skills in managing corporations, which is not just in Greece, it's everywhere where you have family-owned businesses from China all the way to Italy, Spain, Portugal, etc. So in the era of ESG, diversity and inclusion, and in the era of artificial intelligence, the number one priority is to invest in our people. We need to be able to provide them with the tools to understand what is happening and to educate our founders. Now, Eleni provided some numbers, and also Konstantinos, about what is happening, and I'll give you our numbers, what we have experienced, right? So we invested across the two elements that the money is actually flowing, green transition and digital transformation. And that was our bet actually from 5 years ago. So with regards to these sectors, we saw one of our assets in robotics growing 15 times in the last 4 years. We saw an asset in cybersecurity growing 15% a month, and an asset in Ioannina that was mentioned before with Team Ewer is actually managing the airport I was flying from, Heathrow Airport, Hilton, and Bank of New York Mellon. So there are companies in Greece that are doing international moves. I think going forward, we think that it's going to be an enormous opportunity in those two pillars, the green transition and digital transformation, amplified by the RRF and the ESPA. And we see, like Konstantinos says, we have right now access to about 468 sources of origination, and we see 200 deals a month. There is an enormous amount of flow coming into us, and we're going to amplify our investments. We have done 20 transactions in Greece so far, across 6 assets. We're about to announce 2 more after this conference, and we think we're going to do a dozen more in the next 2 to 3 years.
That's really impressive. 22 transactions is really a lot. And thank you, Omri, for providing us with those figures. I would keep from what you said that human capital plays a very important role in what you guys do. So we have to look at that also from the human perspective. Investing in people is something very important, also in terms of private equity investments. Konstantinos, actually, I'm going to ask you a similar question. What is your thinking around what you will be doing the following years in terms of private equity in Greece? Are you going to be investing in specific sectors? Do you already know what is the direction you're going to be taking?
Yes. So in terms of size, there's currently a gap in the market, as most investors and funds either target investment tickets of up to 12, 14 million per investment, or looking at the large players like CVC, BC Partners, and the likes, they target investments which are 150 million or higher. So there's currently a gap in between, which we'll try to address with the new fund, Diorama 2. We'll look at mostly at companies that have an enterprise value between 50 and 150 million. And also we'll look at the opportunities where the founder is looking to sell a sizable stake, partner with a fund like ours, and allow him to support him. And I agree with what has been said. These companies need a lot of help, and we're very hands-on. We have a very hands-on approach. We help in various fronts, whether that's leverage on our network to help establish new client relationships or strategic partnerships. Of course, improving governance and reporting, which usually these companies don't have to a standard that a financial investor needs. And also helping them in various fronts in operations, whether that's supply chain, production, or procurement. And of course, at the same time, prepare the company with our knowledge and relationships when the time comes to exit and find a suitable buyer, strategic or financial. So a new fund, Derma 2, we have raised 158 million as of April of this year, and we plan to increase the size when the fundraising closes next year to exceed 200 million. We will make approximately 10 investments, as was the case with the previous fund. And in terms of sectors, we like more sectors like technology, healthcare and pharmaceuticals, business services and food, because these sectors are more resilient to crises, they have higher margins and higher potential for growth. But at the same time, the sector isn't the definitive factor. We mostly look at companies where, of course, the financial performance and the sector are attractive, but at the same time, the most important factor is the management and its appetite to partner with an investor like ourselves and help him grow during the following years.
Thank you very much, Konstantinos. Indeed, you always need the buy-in of the management, and that's a very important element. Taki, I'm sure that you would agree with me that so far we've been listening to all these good things and a good forecast about the future, but I want to ask you, what are actually the challenges that you face when you are investing? And how can these challenges have any impact on the investment decisions you will be making in the near future?
Orestis, thank you so much. Indeed, we are going through, as discussed during today, we are in a growing stage of the economy and many great things are happening every day. However, we cannot really remember that 5 years ago, 10 years ago, Greece was in a deep economic crisis, and the SMEs companies that we are all after in this panel, they are still face a number of obstacles. First of all, they operate in a small market. Greece, in any metric, is still a very small local market. The fact that access to capital comes and goes, I mean, today and the last 4 years, the Greek banking sector is indeed providing the required, let's say, working capital into the economy. However, 5 years, 6 years, 7 years ago, access to capital was very scarce and very difficult to be achieved. Another major issue that has been developed the last 3 years is that there is actually a significant shortage in labor. I mean, industrial companies especially and companies are in construction, they're having a significant difficulty to find employees to work in the industrial sector, and this is something that is a significant bottleneck in the growing of these sectors. And of course, all this, is affecting also our decision making. So we are hands-on, as I know that all in this panel are. We are extremely hands-on in our investment approach. We try to develop the business that we invest to grow internationally, to solve the issue of the small market by addressing larger markets, both in the European Union but also in the United States. We try to help identify management teams that can help them take them there, because as we discussed, the SMEs that we are investing are effectively small companies that are usually family-owned and run, and they need additional talent in order to get them to the next stage. Another example I would like to mention here, that for us, for example, in the food and beverage sector in this country, we work very closely with the university, the Rutgers University in New Jersey, which is one of the largest food and agricultural schools in this country. And with their Food Innovation Center, that's practically a food incubator, we try to help our companies to, let's say, develop products that addressing this market as well. So we try to be Orestis hands-on and try to help actively management to take these businesses to the next level.
Thank you very much, Takis. Indeed, very important hands-on approach, of course, and your cooperation with academia, that's also very important, trying to take some more substantive knowledge in what you're trying to do. And yeah, what you actually said about basically trying to change the mindset of existing management in family companies. That's indeed an uphill struggle, and we've seen that even when we negotiate these kind of transactions many times. It really takes some time to actually convince those people that as a new shareholder coming in, some things need to change, the way of management needs to change, et cetera, et cetera. Eleni, we're going to conclude this panel with you, and I don't want to sound very repetitive, but everybody in this room knows that we have been going through a very difficult period for humanity. We had the pandemic, of course. We went through the pandemic. Now we are in the midst of a new energy crisis, which might turn into a large recession globally, at least in the Western economies. So I'm really wondering, within that very challenging overall period that everybody has been talking about, is that called perfect storm, maybe we can call it. Why private equity investments, private equity funds do invest in SMEs? What is really the buy-in there? What is the catch?
Okay, I will start with the perfect storm, but I will try to close with an optimistic statement. Indeed, and actually I read a new word, the Collins Dictionary defined the extended period of instability and insecurity as perma-crisis. So I guess Greece, it didn't assign the word Greece into that, but I'm pretty sure that Greece is a very good example. Obviously, we are faced with perfect storm conditions, increased energy costs, the high inflation rates, which obviously affects the price of raw materials, the production costs, the consumer spending. You have all the geopolitical risk, especially for Greece, which does affect the consumer confidence. We had the 2 years of pandemic, and before that, another 10 years of financial crisis. So yes, there have been a lot of, let's say, very non-investment friendly conditions. But we all started in this panel investing in this country when things were more or less the same in terms of the insecurity. And the companies that we have found are companies that have extremely good characteristics, that are companies that had strong value propositions with competitive strengths. In most cases, they operate in sectors with defensive and growth characteristics. And primarily, they had very good management teams with visions. So even in a difficult environment, what we have seen is that good companies, they actually are able to grow by either consolidating the market that they operate in, tapping market share by actually being able to gain the position from weaker competitors. And at the same time, as I said before, they had the ability to adapt and be flexible because of their size and the ability, to move very quickly. I think the momentum here in the investment strategy remains the same. So we will continue to invest in companies like that. And one additional point that the situation provides here is the value of equity, and of course the fact that valuations have become a bit more rational. Obviously, this is not something that entrepreneurs are happy to hear, but for us as investors, it is a good entry point. I think that the stormy challenges that we're facing now do give us the opportunity to show that our role is really important. The role of an equity provider and the strategic advisor is right now of vital importance to the companies. And I think we, as private equities, have the opportunity to, let's say, change the entrepreneurial map and at the end of the day, make returns for our investors, because this is what we're here for. Thank you.
Eleni, thank you so much. Indeed, market consolidation, very important, as well as the point you made about the valuations that, of course, do play an important role in you guys as entrepreneurs trying to understand where to invest and where not to invest. With this and that, I want to conclude this panel by thanking very much, first of all, our minister who has been here with us, as well as all the speakers, Eleni, Takis, Konstantinos, Omran. Unless, of course, there are any questions in the audience, which we could, of course, accommodate. And I actually forgot that, so I apologize. I was wanting to run into the exit. I apologize. Yeah, so yes, let's start there. Yes, thank you. we don't have time.